All right. Happy Tuesday, guys. Welcome to another episode of Exit Liquidity 58, I'm going to guess. 58, 59, somewhere around that. Today we have FP Lee from Sanctum. Very interesting project that we really wanted to talk about, felt like more people needed to know about. So, FP, thanks for joining us, man.
Thank you for having me.
Awesome. We usually like to start out like most other calls or podcasts do, just to hear a little bit more about you and what your background looks like, kind of what brought you to where we're at today. I'm curious to hear like specifically around when I was looking through some of your documentation, there was a pretty big emphasis on like the team being very like Solana OG. I'm curious as to like what that looked like in the early days and kind of what attracted you there.
Yeah, so 3 years ago, I started building on Solana, and I chose Solana. Um, it wasn't like a really big brain thing. I chose it just because it was cheap and it was fast. And I think cheap and fast are really really important. It's not just a performance thing, but it also was like, I didn't have that much money. I was like a casual user. And I think the idea of trying to get into Ethereum, and then every swap you've got to pay like $100, or every NFT you have to, mint, paying thousands of dollars in gas. I was like, okay, I can't, I don't have this much money. I'm not willing to spend it. Right. But, Solana being cheap, very, very cheap, very, very fast, meant that I could start exploring the chain, start building on it, start buying some Soul, start playing with all this, funny DeFi stuff, get rugged as well. But it is what it is. And I think that's where I got into it. And the more I got into it, the more I realized, like, okay, I think like this chain is going to be the future. I want to build on it. And 3 years later, here we are. Yeah.
Yeah, makes a lot of sense. I think that exemplifies the IQ curve meme pretty well. It's like on the left curve, it's like cheap and fast. Right curve is like all the stuff on Solana that I probably can't even begin to explain. What about what kind of brought you to crypto in general? Like obviously when you got here, you were attracted to Solana, but what attracted you to crypto to start out, or what's like your non-crypto background before that?
Yeah, so I studied economics in college, and afterwards I actually worked as a software engineer um in Singapore. And I think at the time, I wasn't being sort of fully utilized at my job, so to speak. It was COVID times. I had some assignments to do, and I did them in 2 hours, and then I had lots of time. And so at the anyway, at the time, Solana was asking for people to build staking dashboards, right? Dashboards for this new thing called stake pools. And no idea what stake pools were. I was very new to crypto, but they were offering something like $20,000 or something like this, if we could build like a dashboard for stake pools. And I was like, okay, I know how to build a dashboard. I'm an engineer, right? Like I was like, it'll only take me 2 weeks, right? And so I built it. But then sort of one thing led to another, right? So we built the dashboard, but before we finished the dashboard, we realized, okay, this is a dashboard for stake pools, right? And then I asked Solana, I was like, you know, do we have any stake pools yet? And they're like, no. And I was like, when are they coming? I was like, oh, we don't know, sometime in the future. I was like, what's the point of building a dashboard for something that doesn't exist? And so we thought, okay, well, maybe we can help to build the stake pool, and so we were helping to build the stake pool, and we realized, oh, okay, this code isn't quite ready. That there's this exploit we found sort of some buggy sort of edge cases. There was like, oh, those are some good suggestions. And at that point we were like 3 months in, and we were like, okay, we know this program like back to front. We helped even to write some of it. Like, why don't we launch a stake pool, right? And I was like, okay, we'll just launch it, and you know make put some soul in it, and make a couple grand or whatever. And then sort of one thing led to another, really. And sort of we thought it would take two weeks, and then it take 2 months, and then sort of now 3 years, like, we're still here. So funny how things go. Yeah.
Yeah. You mentioned a bit about some of the rugs you've been a part of. The show is called Exit Liquidity. We like to ask some of the founders, what was a story or your favorite moment of you being Exit Liquidity that kind of represents your journey in the space?
Oh, that's a good question. So I'm like a DeFi guy, right? So I really bought into the hype for some of this DeFi stuff. One of my good friends was like, "Oh, Ohm is like such a big brain thing." Do you guys remember Ohm, like on like Olympus?
Yeah, yeah,
And I was like, I read the documentation like 5 times through. I was like, this doesn't make sense, but like maybe they know something that I don't. And so I just went in, like 10K, put it in. And yeah, I was absolutely Exit Liquidity. Held it all the way to 0. I don't know why I did that. But I thought, okay, it's so big brain, this it must make sense somehow. And I think the lesson there is to sort of trust your instincts, right? Like if I think it's a bad deal, like I should trust myself, right? Yeah, that was one. And I think what was another one? I think there were a lot of sort of DeFi projects that I sort of put in back in the Solana days. And I will say, as an aside, that I think the quality of projects like back in 2021 versus now in 2024, like there's a big difference. Like the quality of founders, just candidly, right? Back in 2021, there were a lot of founders who were there like just for the money, or like just for just running sort of like semi rugs or outright rugs. I don't know if you guys know like Parrot Finance. This was back in 2021. They did this like 100 million sort of IDO, and then they basically just cut it and left with all the money. So it was like a serious rug. I didn't put money in there, but anyway, sorry. The point is the point is that in 2021, the projects were like kind of dubious. But I think if you look at the top projects now in the Solana space, I really think that these guys are really here to build, especially because a lot of them were forged in the bear. So a lot of these quote unquote mercenary founders have been washed out by that 1 year of Solana being really really down in the dumps. Yeah.
yeah. 3 years is a pretty long time, especially in this space, and to be kind of fully in on the Solana ecosystem during those like hard times that you just mentioned. You touched on kind of the founders and the quality of founders at that time versus now. What were some other like noticeable differences or moments from when you kind of first joined the Solana ecosystem to where we are now?
That's a good question as well. I think in 2021, Solana was, I think, relatively new, right? So I remember it was trading at like $1 or something, and then it went up to 10, and then it went up to 30, and then it got like a huge wave of attention, right? Because obviously price drives everything, right? In this industry, and I think a lot of the projects, like there was a lot of interest, there were a lot of projects building, and a lot of it, to be frank, it was basically the pitch to VCs were like, oh, we're building this but on Solana, right? And where sort of X would be something on Ethereum, right? So in fact, this is, I'll be frank, like how we pitched it as well, right? Like we didn't know anything about liquid staking, we didn't know really much about soft stake pools. I mean, we did as we went, but really the idea, including sort of how the Solana Foundation, the Solana Labs thought about it, was like, okay, let's just take the Lido staking model and let's just copy it on Solana. So we're basically saying, okay, this is Lido on Solana, right? And then people were fighting to be Lido on Solana, right? And it's not just this as well, right? Because if you think about the sort of like borrow lending, right? That's again, it's basically like a translation from Ethereum to Solana, right? Like same thing with the LPs, with the swaps and stuff, right? So a lot of that, it wasn't real innovation, if I can say. This was just a copy and paste job from Ethereum, right? And that's kind of how the first wave of projects come out, right? And I think 3 years from now, particularly in the bear, right, you have founders really thinking hard about like what do these primitives actually look like, right? How should they look like on Solana? Because it's completely different chain, right? You don't have these gas concerns. First of all, it's fast, it's cheap, right? And I sort of, I know best. I mean, for me, I speak from the staking perspective. I can tell you that staking on Solana, just fundamentally with the idea of stake accounts and all of this stuff, is very, very different, right? Like, how long is the cooldown, how long does it take to withdraw, right? All of these stuff, like all of this stuff affects the primitives that you develop, right? And it's the same, not just for staking, but for everything else. And so we're seeing lots of very, very interesting projects nowadays, right? Which are not just aping what it's like on Ethereum, but actually trying to innovate, on the basis of like Solana, right? How would you build from first principles something on Solana? Does that make sense?
Yeah, 100%. I think that's a lot of what for those who like still stuck around paying attention to the ecosystem over, I guess, like pretty much after the whole FTX blow up. That was, at least for me, that was like the saving grace, is that there were like teams there building cool things, building unique things. And obviously that hasn't slowed down now at all. Quite the contrary, actually. I would like to get into Sanctum a little bit here. Sort of, if you could just describe from a high level what exactly it is you guys are looking to do, but more specifically, like looking at it from the backdrop of the problem you're trying to solve. So, like, if you could explain what the problem is and kind of how Sanctum's addressing it.
Okay, cool. Yeah, so the problem really we're trying to fight is that of centralization. And let me explain, right? So from what I've observed, Ethereum is doomed. It really, I know this is kind of like a hot take, right? But I think Ethereum is doomed and Solana still has a chance, right? So the reason I say this is because, um, liquid staking. This is the reason. I think liquid staking on Ethereum is the reason why Ethereum is going to go down, go down a very dark path. We have, Ethereum and Solana is a proof of stake network, right? And whoever controls the stake controls the network. This is by definition, right? This is, you can't argue with this, right? And we have Lido, who has for the longest time controlled almost 1/3 of the stake, or probably 1/3 already, right? And we know for a fact, at least theoretically, 1/3, if whoever controls 1/3 of the soul can of the stake, not the soul, of the stake can basically halt the network, right? This is a liveness violation, right? Now, this is a theoretical concern, right? And it may not happen in the future, but right, nonetheless, whoever controls this 1/3 of stake controls the network, right? And you have this Lido token, LDO token, as a governance layer on the whole of the network, right? And this is not how it should be, right? But you have sort of people who are buying in, who have large bags of Lido as a governance layer who can basically dictate what Ethereum is, right? It's a governance layer that nobody asked for or nobody wants. So that's what we're fighting against, right? We're fighting against stake inevitably centralizing towards one entity, which represents an existential threat to any blockchain, right? And I think Ethereum is a cautionary tale on what could happen to Solana if we don't fight against it. Does that make sense?
Yeah, totally. I think lots of people, especially in our audience, are familiar with the issue of, I guess, like Lido. I mean, I want to say stake decentralization, but just Lido centralization. And then even when you take it a step further and you look at like who the like 3 or 4 biggest stakers are there, even like the individual stakers, it is, quite concentrated. How does that like issue, or I guess, does that issue exist on Solana to a similar extent?
So that's exactly kind of what we're fighting against, right? So let's first, let me just explain a little bit why sort of decentralization happens, right? Like why do we think it's inevitable, right? And I think the core reason, if you had to distill it down, is that liquidity is a positive feedback loop, right? Liquidity leads to more liquidity, which leads to more liquidity, which leads to more liquidity, right? Because you have this LST, right? And what's the purpose of an LST? The whole point of an LST is to be liquid, right? So you need to have a liquidity pool, and what it looks like, I mean, it's a Uniswap or whatever, right? Some sort of LP, right? And the bigger that gets, the safer it is to put, to deposit into Lido, right, into that particular LST, because you know that there's now a deep pool of liquidity. But that in turn, right, drives organic demand for that LST, for that LP, right? And so it just centralizes, because the bigger you are, the safer it is, which means the more people deposit, which means the bigger your LP gets, and so on and so forth, right? So liquidity inevitably leads to centralization. And it also means that you have this huge liquidity moat, and that's why any kind of new entrants will have to fight, at least put up like millions of dollars in capital to at least sort of be competitive with this sort of liquidity pool, right? So this is why I think that if we don't do anything on Solana, right, that we will inevitably look at, basically we will go down that path, and we will get one entity controlling all the stake. So what are we doing, right, at Sanctum? We are fighting against this kind of centralization by building a unified liquidity infrastructure, right? We are combining liquidity into one sort of unified whole. And what that does is that it tears down the barriers to entry, right? So you don't need to have like millions of dollars to just start your own LST, right? You're leveling the playing field so that even if you're something, it's not about how deep your pockets are, but it's about how much value you deliver to your stakers, right? And with this unified infrastructure, we're driving switching costs down from one LST to another LST to near zero, right? And this basically means that you don't have that same centralization feedback loop. You don't have that liquidity mode, and also you've got lots more innovation at the LST level, right? Without having to have high barriers to entry, millions of dollars to even just to try out your new idea. So that's what we're doing at Sanctum.
Yeah, I think could you paint a picture from a very high level on what staking on Solana currently looks like? You don't have to get too technical, but just so people have I think people understand the ETH staking mechanisms and the way validators kind of fall into that process. But I think people don't have a similar understanding with Solana. So could you break that down and maybe touch on maybe the largest stakes or largest LSTs on Solana currently?
Yeah, sure. So are you asking about how native staking works or how liquid staking works in particular?
I think you're gonna have to explain both and the differences.
Okay, cool. So let's just talk about sort of native staking, right? Which is the sort of non-liquid staking, right? And this is, you can think about, putting you have gold bars, which is that's like Sol, and then you're putting it in a vault, right? In a bank vault, and sort of you're locking it up, right? And and here's where the analogy breaks down, because gold doesn't multiply itself if you put it in the vault. But in this sort of magical vault, you put the gold bar in, right, and you get more gold bars, right, as you go. And then imagine it's this big vault deep underground. Every time you've got to retrieve it, you've got to wait 2 days, you've got to go down, unlock it, and it takes a long time. That's what staking is, right? So you're locking it, you're locking the gold bar into the vault, right, to get more returns, and then but in return, you're sort of giving up the ability to sort of access it immediately. So that's native staking for you. And so something, a little bit of a technical detail is that when you are staking, you're choosing a validator to stake to, right? But that's not sort of so relevant to our discussion right now. So that's native staking, right? Locking your gold bars into a vault. And what liquid staking is that it's the same mechanism, right? It's locking your gold bars into a vault, but in return, the protocol, you're giving it to the protocol, which then locks the gold bars into their vault, and in return, the protocol gives you like a piece of paper, and this is like an IOU, or like a piece of paper money, and that piece of paper money we call the LST, right? So the idea is that the paper is redeemable for the gold bars in the vault, but you don't want to redeem it. What you want to do is you want to use it in DeFi, right? You want to sort of trade it around. You want to do all of that stuff, because it's very hard to trade gold bars in a vault, but it's very easy to trade this piece of paper. Does that make sense? So this is the difference between sort of staking and liquid staking. And so notice that in liquid staking, we think often about liquid staking as stake pools, and we conflate these two, right? But they're actually not the same, right? So liquid staking is just this process of having sort of, taking the paper out of the vault. Issuing a paper for, issuing the IOU for gold bars that are in the vault. But that says nothing about who are you delegating to, who are you staking to, right? This is a completely different sort of concept, right? Now, in a stake pool, what the protocol does when you give them your gold is that they distribute it to different sort of validators. They stake it to different validators, right? Like maybe hundreds or 50 or 20 or whatever it may be, right? In different proportions. But you don't have to do that really, right? Like the vault, you could delegate it to one validator, like a single validator, your own validator, for example, right? There's no reason why you want to split, why you would split your stake in this way. And so these are what we call single validator LSTs or single validator tokens, which are essentially the same thing as LSTs, except on the back end, instead of delegating to hundreds of validators, you're delegating to one. So that's the difference. And I hope that makes sense. Yeah.
Yeah, that helps a lot. And so currently, I'd say I'm not too Solana. Ali is the resident Solana guy here. I've been wrong about Solana for months now. So he really saved our podcast on that end. But the LSTs, I guess, that could come to mind initially for me would be LST, MSOL, Jito Sol. Are those the biggest players in this game? And then could you talk about like the different decentralization levels in some of the top ones?
Sure. So the top three by let's talk about top four because you mentioned LST. So top one is the largest one by TVL is Jito Sol. This is stake pool ran by Jito, by Jito. The tagline is MEV powered staking returns, but but it's actually not. That's actually not an accurate tagline, and I can go into why. Um, um, then second is Marinade, so MSOL, and I think their shtick is that they are very decentralized. They have a good delegation strategy. They delegate to lots of validators, and they are very careful thinking about how to support hundreds of validators. So that's the second one. Soulblaze, right? I think what's special about Soulblaze is that it's very community based. So you have a high, it's not VC backed. It's high token float, right? And he's very generous with the rewards. So the token is very well distributed, and he's very generous with sort of giving this out. So it's a true sort of community stake pool. So it's a good choice as well. So all of these three delegate to like lots of validators. And then fourth on the list is LST. This is the one by MarginFi. And the special thing about MarginFi's LST is that it has 0 fees, and it also delegates to only the MarginFi validators, right? So they, I think they spun up like 2 different validators of both of which are their own, right? And they don't they don't claim to be decentralizing stake. That's not what they care about. They care about giving their stakers like top tier APY, right? That's their idea. So these are the largest 4. Yeah.
Why? I'm not too familiar. I mean, I know there was some like drama recently, actually this week, I think, with Jito and Jito Soul. Why would it not necessarily be like an MEV protected, or I guess what's the claim they make and what's wrong
Right.
with it?
So to be clear, the claim is not wrong, not incorrect. I just want to make that clear. I think it's a little bit more like misleading marketing, right? So Jito says it's MEV powered staking rewards, right? And that kind of implies that it's the only LST or that gives MEV powered staking rewards, right? That's kind of the idea, right? And many people don't know this, but in fact, all of the LSTs give MEV powered staking rewards. People will say, oh, but if I go to Jito, I'll get MEV rewards. Yes, but also if you go to any other of these stake pools, you also get the MEV rewards. So it's kind of like it's kind of vacuous claim. And the reason is because the way that Jito distributes its MEV rewards is actually through the validators itself, and the validators themselves can decide whether or not to sort of kick back the MEV rewards, right? So that goes at the level of the validator, and so we've actually helped to set up like 6 new LSTs with like lots of new validators, and one of them is giving up 50% of block rewards plus MEV rewards, right? So this is like very common, right? Another one's giving out like 10%, right? And so on and so forth. So it's actually, and many validators in fact are giving out MEV rewards to their stakers. So it's not the case that Jito Soul is the only place in which you can get MEV rewards. It's a place, right? And I think they run, they have a really, really good sort of moat with their MEV client, which is really, really smart. But it's not, that's if you're staking into the Jito Soul stake pool because you want to get MEV rewards, that's not, that's not correct. Yeah.
Okay, I see. Yeah, they did a very good job on the marketing front then, because
Absolutely.
I was certainly not aware of that.
Yeah, I mean, more power to them, right? Like it's
Yeah.
I think it's an accurate statement. I wouldn't dare to say they're not lying or anything. It is true. It's MEV powered. It's just not exclusively Jito Soul that's MEV powered. Yeah.
Okay, that's interesting. Cool. So now that I think we have like a pretty bare bones understanding of like uh kind of what the space looks like and the problem here, and obviously like what Sanctum is hoping to do from a high level. I'm interested to hear about your products. As far as I know, there is the Sanctum Reserve, there's the Infinity LST, and then there's the Sanctum Router. Um, can you explain what each of those things are? Maybe how they work together? Just I guess like each component.
Yeah, sure. So I think let me so before I get into the nitty-gritty details, right, let me just say like all the three products are trying to solve that one inherent problem, right? Which is that liquidity is a moat, right? So if you've got a big investment from some very deep pocket VCs, it's easy for you to get lots of liquidity, right? And that inevitably leads to its centralization through the mechanism that I mentioned, right? And what we're really trying to do is we're really trying to break this moat, just destroy it, right? And so all of our products are meant to basically unify the liquidity and make it accessible to small LSTs, right? So let's first talk about how LPs work, how liquidity pools work, before Sanctum, right? You have Orca, Radium, Saber pools, whatever, right? And this would be usually, let's say, MSOL, Sol, right? So two assets, right? And what is the idea is that if you've got holding MSOL, right, and you want to go, you want to do an instant unstake, you would go through these liquidity pools, right? So you would that would just be a swap, right? On a stable swap pool, right? And of course, the larger that would be, the larger that is, the safer your stakers become, right? Because now it's backed by more liquidity, right? And all of this was the most important thing is that all of this was like separate. If you have ST Sol or if you have Jito Sol, you cannot go from like there's no way you can go from sort of like you cannot borrow the liquidity pool of Marinates. Like you have to make your own, right? And so what Router does is that it basically unifies all of this stuff, right? So it allows you to go as if from magic from Jito Sol to M Sol, and from M Sol to B Sol, and from from any LST to any other LST, right? And so what that means is that if you have a single LST that is very small, it has like maybe a couple $1,000 in a Saber pool, so that usually would be quite useless. But right, with the router, it unifies the liquidity, so you can go from your LST to MSOL and then borrow the millions of dollars of liquidity in that pool and in any other LSD pool, right? And this is not just good for small LSTs; it's good for the whole ecosystem as well, right? Because now these LSTs don't have to fight for like, oh, I need to ensure liquidity, in my LST, right? And as long as the pool of LST liquidity grows in general, right, then this is good for everybody, right? It makes all these liquid staking tokens much more liquid, right? Does that make sense?
Yeah, could you describe? Well, I want to take your word for it that it's magic, but could you explain maybe some of the mechanics
Sure. Yeah.
of how that would work, how that
Sure. Happy
magic
to do
happens?
that. Right. So the trick is that LSTs are wrappers over stake accounts, and stake accounts are the fundamental unit of stake on Solana. Okay, so this is very different from what it looks like on ETH. Okay, and the idea is that um, when uh, when you have MSOL or when you have Jito Sol, right? These are just wrappers. Like imagine sort of like you have a sweet in the middle and you've just got like a wrapper on top. Okay, and so what we do, like how we do it, is that we just unwrap the first wrapper, right, that says MSOL, and then we put another wrapper on that says Jito Sol, and this is how you can transfer the stake from one LST to another. Yeah, so that's kind of how we do it. more technically, right, it's just we take a stake account. We take MSOL, right? Let's say you want to go from MSOL to GDOSOL, okay? So we take the MSOL, we do a withdrawal, right? We unwrap the MSOL into get a stake account, okay? And then we deposit the stake account into the new LSD, right? And to get that new LSD, like put the wrapper on, a new wrapper on, right? And then you can go to the different LP pools, right? Does that make sense?
Yeah, and that's all happening in seconds in one transaction.
Oh yeah, absolutely. It's like atomic, right? You can go, and with Jupiter, right? Jupiter is like insane router, right? So it's not just one wrapper, right? You can split it into four and then wrap with four different ones, and then like you can go, each of them can go to a different liquidity pool. So it's all very complicated. But yeah, it just all works in a single transaction. Yeah, which in
Okay.
Solana takes like seconds, right? So
Yeah. And in the pool itself, so the creation of that original pool that everything is routed through, is that where your guys's, I want to call it an LST,
Mhm.
comes in? Like people that kind of go from Sol to that LST contribute to that pool?
Right. So that's a slightly different product. So what I've described now is the router, right? So the router is basically the claw, a special claw that sort of, unwraps and wraps and unwraps and wraps and therefore sort of shares the liquidity pool, right? So that is okay. That does work. The building next, or what we've just launched, is in the infinity pool, right? And the infinity pool, you can think of it as an LP that has all the LSTs in it, right? And so, basically just think of it as like a multi-asset LP, right? So like something like Curve, I guess, for stable coins, but a little bit different. And so basically this, there's no unwrapping needed here, right? You can just go from any LST inside the pool to any other LST inside the pool. So it's a different mechanism, but it's cheaper because when you do this unwrap that I mentioned with the router, you do have to pay a fee to the stake pool for doing this withdrawal. And so the idea of Infinity is that it cuts that fee to zero. I mean, basically, but by not doing this unwrapping, you're able to get like much cheaper rates. So Infinity just lets you go from any LST to any other LST, right? Within the pool. So if there's like 10 different LSTs, or then you get like 100 different swaps, right? Something like this, right? So 10 times 10. Yeah. It's not quite that, but you can think of it like this, right? Because you've got, every single pair of the 10 assets. Yeah.
Is that I'm not 100% sure because I haven't looked into these guys in a while, but is that kind of similar to what Unsheath was doing back? I think they pivoted since then, but it was I think a similar concept in that they had their own LST that was backed by a pool of 5 or 6 some LSTs that they would just try and maintain a healthy ratio of all of them to each other. Is that kind of similar to what's going on here?
I'm not so familiar with what Unsheathed is doing, but it does sound similar. Yeah. What chain
Okay.
was this on? Oh.
This was on Ethereum. Yeah,
Okay.
I think maybe on Arbitrum as well. So if I go to like the Sanctum website right now and I want to deposit some of my MSOL and receive Infinity
Yep.
in return, what does that process look like on the back end? When I deposit my MSOL, what happens to it?
Yeah, so that's pretty straightforward. When you deposit the MSOL, that goes straight into the Infinity pool, right? And then you're done, right? So what we do on the back end, right, is like we may do some rebalancing, right? So if we have seen like, I mean, so if you have too much MSOL in the pool, lots of people depositing MSOL, it does no good if like this pool has like only one asset because you can't do any trading this way, right? So we may sort of rebalance it so that we get a nicer sort of distribution so that it can service more, right? It can service more trades. Yeah, but we can do that via an economic mechanism or via the actual sort of wrapping and unwrapping mechanism that I told you about.
Okay. I think you're doing a great job of explaining those things. Again, we're usually an ETH-centric show, so
Yeah.
appreciate that explanation. Someone in the comments has asked about incentives for holding Infinity. So they're referencing like I think Bonk Soul.
Yeah.
You earn Bonk for holding Bonk Soul apparently.
Mhm.
will there be similar incentives for Infinity?
Yeah, so we helped Bongsol set up this. We helped Bong set up Bongsol like about a month ago, and I think that has gotten like lots of organic interest because people just love Bong. People want to support the project, right? So we're really happy that they are getting lots of traction. We we haven't announced anything yet, but I can say that we're working with our partners, right? To try and get sort of basically to make sure that INF holders, get something too. Yeah.
Wait, can we? I know that the token stuff's fun to talk about, but there's a bonk soul. What that like?
Yeah.
You earn bonk for holding a bonk or for holding an LST.
Yeah. So I mean, this is something that we're really, really proud of, right? Because we've built all of this liquidity, right? This unified liquidity layer, and it's not just the idea is that it's not just helping the existing GDOSOL, MSOL, whatever, BSOL, right? These incumbents, right? They are big enough. They don't really need help. What we really want to help is that we want this with this infrastructure, all these kind of small LSTs become like viable, right? Because you don't again. If you think about Ethereum, like if you want to make any headway, you have to pony up like millions of dollars in base liquidity, right? And then like that's hard, right? That's really hard. And as you grow bigger and bigger, you have to pump even more capital in, right? So, but we've solved that now, right? That is a done problem. You can go from any LST to any other LST, and you can achieve, you can get like lots big trades, no slippage, whatever, right? So that's what we've done, right? And what that implies is that you can spin up tiny LSTs, right? Tiny LSTs that don't have any native liquidity. You don't even have to spin up an LP of your own. You don't have to pay up millions or even hundreds of dollars. You can just spin up the LST. And we work very closely with all of these projects to spin these ones up. So we have Bongsol, Compasol, Driftsol, right? Super Soul, Power Soul. So we've got we've got tons, right? And more are coming, right? And the reason all of these can just work like from day one is precisely because of what we have built, this unified liquidity layer. So if you guys want to do Exit Liquidity Soul, right? Okay, I mean that's not a great name, but like Exit Soul, I don't know, right? Like you could just spin one up, and you would be guaranteed that you would have deep liquidity, right? If someone wanted to ape in like 1 million and then they change their mind, they want to sell it off, like that's no problem for that, right? So and this unified liquidity layer, we've seen so much innovation in the past 1 month, right? From as I said, like all these projects spinning up their own LSTs, each of them having their own idea of what they want to do with their stakers. So Bonk dropping Bonk rewards, right? Other people dropping different rewards, right? We've seen more innovation in 1 month than we've seen like in the fucking whole history of Ethereum, like with Lido. Like that's crazy.
Yeah. Is there there's no like I mean, I guess just from your tone it sounds like the answer is no, but there's no like limit or anything to this. Like if I wanted to go and spin up like Ali Soul and I wanted to take like a 0.5% commission on that, whatever, like I could do that with you guys, have deep liquidity, like, share it with all of my followers and friends, have them, ask them to hold Ali Soul instead of Jito Soul or M Soul or whatever. And I could, earn revenue off of that if I wanted to.
Absolutely.
How
And I think
deep is that? How deep is that liquidity day one?
So
you used $1 million as an example. I'm kind of curious what the top end of that looks like, or is $1 million kind of like the top end?
no,
Like day
we've got way
one,
more,
Ali
right?
Soul
So
comes.
if you go to let's look at, for example, like if you just type on Jupiter, right? You've got let's type like Bongsol in, right? Let me just look at it, right? So you can do, I'm typing the numbers in right now, right? You can do like millions. I think you can do, I think maybe like over 10 million, I think. Yeah. So
With
I
what
think,
kind of, is there slippage or price impact to that at all?
I mean, yes, there will be price impact, but I think it's not. So basically, we have this reserve pool, right? And the reserve pool has 200,000 soul in it, which I think current price is like $30 million, right? And that will service your thing with like less than 5% slippage, like at the top end, right? If you're doing smaller amounts, it's like 30 bips, 50 bips, 10 bips, 5 bips, depending on how large the amount is. Yeah. So So at the positive, like if you wipe out like 30 million off that, right, then it will cost you like 500 bips. But if you're doing like 3 million, it will cost you like 30 bips at the most. Yeah.
Wow. Yeah.
Yeah.
That's a very, very exciting vision. I think it's kind of coming together now for sure. I want to, you talked a little bit about incentives. I'm curious as to like, so obviously the whole goal here is to kind of maintain decentralization across LSTs, kind of avoid what we've seen happen in Ethereum and other issues that might come as a result. What about Sanctum itself? Like, what's the path to decentralization look like for you guys? And like, how far off are we from that?
Yeah, that's a good question. So for us, right, it's been, we are in no hurry to rush a token. I have, like I have been building here for 3 years, and I think if I were a little bit more mercenary, I definitely would have launched it like a long time ago, right? So we are here because we see a problem that needs to be solved. We are looking at an existential problem that needs to be solved, right? And I think we have done, like, our product is good, right? I will be honest with you, like our product is good. Like, don't just ask me, like ask the Margin 5 team, ask like anybody who's anyone on Solana who's DeFi or liquid staking, that is, right? And they will be like, yes, like Sanctum is doing like foundational work, right? Just like Jupiter, and I think our product is good, but what we really need now is for people to understand, like, what is this future that we're building? What is this infinite LSD future, right? When that you can have an Ali soul and an exit soul and all kinds of all these different souls, right? For all kinds of different people, all kinds of different needs, right? And this like a 1,000 different flowers, blooming, as opposed to Ethereum, where you have one and a half. You've got Lido, and then you've got Rocket Pool as a distant second, and then how the hell, lots of others, who cares, right? Yeah, so that's the vision, right? And I think we have like a little bit more way to go, right? But I think we're finally there. We're finally at the finish line, I think. And I think we didn't expect this, but the bull market seems to be coming, so that's also a good thing. But I think like we are finally at a point where I can say like, yes, I'm proud of this thing that we have built over the past 3 years. I think we're ready. Yeah.
Yeah. Is there you guys have built all these different pieces to kind of accomplish this end goal, and uh it feels like you guys are pretty much there in terms of accomplishing it. I think in the future you guys are just kind of grab more liquidity, onboard more LSTs. But is there anything else on your guys's like vision board, North Star, any other problems or areas where you want to kind of improve or develop in the Solana ecosystem, or maybe in the ETH ecosystem?
Well, 2 years ago, 3 years ago, Solana is copying ETH, right? And we are copying. I'll be frank, right? Like the initial V0 of the program, we just say like, oh, what's Lido doing, and let's build it on Solana, right? And I think now, they should look at us, right? The ETH guys should look at like, holy shit, like look at this crazy stuff. Look at this, deep, 100 million pool of liquidity, right? Not just Sanctum, by the way. We obviously we have 30 million, but there's lots of other pools out there, and we love, we want to support and unify all this stuff, right? Look at, I want ETH guys to look at this, tons of hundreds of different LSTs all magically working, interoperable with one another. No winner takes all. No, wringing your hands about the Lido dominance every single day, right? I think it's time for ETH to look at Sol and like, holy shit, this is like a future that we should be part of. We should try. And I don't understand ETH well enough, right? I think someone else should build it. But like, I think this is the future. Like, we are showing all of these proof of stake chains out there, especially Ethereum, like a better future is possible.
Yeah, I like that. Completely tangentially, you know, uh, Sanctum aside, you talk a little bit about the problems with Lido and the governance surrounding that. Are there any good governance models that you personally think have been successful, or
Mm.
kind of how you think about governance in crypto as a topic?
This is a great question. I have actually been thinking about this a lot because we are moving towards our own governance. I think one failure case is that okay, this is not an original thought by any means, but I think it's true, right? I think a lot of DAOs try to decentralize too fast, and I think that's like a huge failure case. Because the moment you get that and you get like token voting on any small thing, you can't get anything done. I can tell you, like, if we had like DAO and launched our token like 2 years ago, like you cannot move like this fast, and there are entrenched interests, and there are people who are out there who are much more short term, and to be frank, they don't understand the problem domain nearly as well as we do, right? Because we've been here, and then these guys bought some token and they think they're experts, like like it's not it's just not right. Like it's not. You should not. I think it's a big failure case if you try to decentralize anything like too fast. Now, at the same time, I think if you decentralize too slow, then like I think the governance portion is just theater, and that's again not what we want, right? You want people to have like really, really like to think that they to really be sure that their token actually is doing something useful. So I think it's a bit early days, but I like what Jupiter is doing, right, with their token, right, with their token model. I think so. They are not saying, they're not committing to sort of anything like sharing revenues or having this shared treasury or whatever, right? Not yet, at least. But like look at what they are doing with the LFG. You guys know the LFG, the launchpad, right? They are getting people to vote on which projects they launch, right? And I think that is really great. Why? Because when you have a centralized exchange like Binance, like how do they decide how to list projects? You have no idea. You have no clue, right? And I can tell you that a lot of them is very predatory, right? They're asking for like your token, they're asking for these market making deals. You have no control. They're gonna pump and dump it. You have no idea, right? Like you have no idea. And I think what Jupiter is showing is like, hey, like we're planning to launch these projects, like vote for the ones you want, right? I think that's great. That is really, really good. This is exactly what governance should be used for. But should governance be used for things like, okay, like how like can we manage this treasury money, or like like what products should we develop next? Like this, I think this is best left, at least at the start, to the people who have lived and breathed the product. Does that make sense?
Yeah, no, for sure. I think it's definitely like one of the more interesting thought experiments, I guess you can take on at this stage. Implementation is obviously like a whole other thing, but we always like to hear kind of where founders' heads are at there. I want to go off topic a little bit here, or I think off topic at least. This is the first I've seen of this. Eric asked about 10-15 minutes ago whether there's going to be a link between Sanctum and Pathfinders. And I don't know what Pathfinders is. I just saw it in your bio just now.
Yeah.
I'm wondering if you can tell us what that is.
Right. So Pathfinder started off as a kind of like a throwaway thing that we did for Socian, which was what we were before we rebranded. And after, it was basically like a NFT project, right? That we kind of, it was a bit throwaway. But then we realized that this, like, we have really, really talented folks on the team. We have like a very strong IP, and we've been building it for so long, right? And now we've completely spun it up to into a different project, but the teams are in very close contact now. I'm not working on a day-to-day for the Pathfinders NFT project, but we have some very, very capable people at the helm and working on the Pathfinders project. Pathfinders is a Studio Ghibli inspired project. The art is fantastic, the lore is wonderful, right? Like, I mean, you guys should go check it out. Will there be a link between Sanctum and Pathfinders? Yes. We are planning something really, really new with Pathfinders. Let me just sort of quickly sketch out the problem, right? I think with a lot of NFT mints, like when you mint, right, your soul is just gone, right? It's it's in project treasury somewhere, and then you've got to pray that the founder is not going to take your soul and sort of sell it all off, or go and have parties with it, right? So we're looking at, is there a way that we can use LSTs, right? With Sanctum, powered by Sanctum, can we do NFTs that really kind of change this meta of how NFTs are? Can we do, mints? Like, can we basically just change the meta such that NFTs, cannot rug you? that's something that we want to do, right? Because I think that's like the biggest problem in NFTs. Yeah.
Wow. Yeah, that's some exciting stuff. Didn't know that was even on the radar. While I'm snooping through everybody's Twitter here, I got another tweet I would like to ask about. From this one's from Sanctum from yesterday.
Mm-hmm.
Says we have 4 pieces of the Sanctum jigsaw live at this moment, and 1 more to be announced soon. There's the router, reserve, infinity, and validator LSTs, and then there's a 5th one that starts with a J. Um, can you give us any more letters there?
You should ask Jay about it. He's it starts with a J. My name starts with an F, right? So no, I'm
Okay.
kidding. Yeah. No, it's something very, very interesting. I think, yeah, no comment right now. Yeah.
Fair enough. Thought I had to ask. We're starting to come up on time here.
Mhm.
Definitely have gone over a lot of interesting stuff so far. A lot of stuff that I think a good chunk of our audience, and me and Cedo at least, weren't super aware of, but definitely now I think are finding ourselves more interested and wanting to be involved as a user, as a creator.
Mhm.
For, I guess, like, just a last thing to leave our audience with, is there any sort of like calls to action, anything that you think the people should know about you or about Sanctum or about the problem you'd like
Mhm.
to solve? Kind of like any closing remarks here?
I,
Yeah.
I, I
Go
sorry,
on.
I just want to mention for the people watching, I think they're pretty interested in you personally and what you're doing. Could you maybe tell the people where you're at right now, what you're up to right now?
Oh, sure.
On that
So the team is in New York right now. We're gonna be here for a bit, but we're all working together. Um, I am not sure we can announce why we are in New York at this particular time because we're working with some external organizations. But all will be clear very soon. Yeah, if you guys are in New York, want to meet up, like, please just drop me a DM on Twitter anytime. Like, we love to meet people. We love to meet our users, right? Collaborators of all kinds, right? So we're in New York. Um, the other thing, call to action, right? So I think 2 things, right? Like, okay, maybe 3 things, yeah. Not to overload, right? First is, try and understand, like, please try and understand, like, what we're doing and why. Like, we're not trying to be a Lido. We're not trying to be like, yet another sort of like, centralized authority. Like, that's not what we want to do, right? So, a lot of people are asking, like, oh, should I deposit to INF or should I deposit into, all the other LSTs, right? I think the answer is like both, right? They serve very different purposes, right? So here's first call to action, right? Understand what we're doing and why it's important for Solana, for the network, right? Second, right, look at all the LSTs, and I mean all of them, right? Look at which one appeals to you. If you're a bonk holder, you want to hold bonk, great, go to bonk soul. We support that, right? If you want to support, Jido's MEV stuff, right? Absolutely go for Jido Soul, right? If you want to support, Compass Soul, Drift Soul, Drift, really good perps project, right? Go for that, right? Go and support the LST that you want, right? And then, right, the last call to action is, if you want to help to build this, liquidity future, if you want to, help to support the infinity pool and make sure that we get deep liquidity for all of these LSTs, then deposit your LST, or soul into INF, into the infinity pool, right? But again, only do that if it makes sense for you, right? And if you just say, hey, I'm not interested in providing liquidity, right? I'm interested in just holding Bong Soul because I'm a huge Bong supporter. Great, go ahead. I don't, we are not going to, we're not trying to swallow up the LSTs here. Just think of it as a liquidity pool in which you can provide liquidity for all LSTs. Yeah. So those are 3 call to actions, right? 1, understand what we do, right? 2, ape into the different LSTs, and 3, ape into infinity. So those are the 3. Yeah.
Yeah, very straightforward, very easy to follow. I think that makes a lot of sense, and it's definitely important for people to understand. Out of curiosity, what would be your preferred LST? Infinity aside, obviously. Where would you be parking your stake?
This is you're putting me on the
Tough
spot here
question.
because
Hardest question of the
I'm
episode. You can give
I'm
multiple too
supposed
if
to
you'd
be
like.
credibly neutral, right? So I'm not sure, but okay. So personally, right? Like not financial advice. Like this is not what Sanctum is, right? Personally, but I think okay. So there are these single validator LSTs, right? So we have Cogent for Cogent Cox, right? We have Lane, right? Compass, right? Etc. A lot of these are, and Bonk as well is a single validator, right? They delegate to a single validator, right? I think a lot of people forget or they don't realize that validators are not just machines. You know, like I mean, yes, they are machines and they're running. You know, they're helping to keep the Solana network alive and stuff. But there are people behind those machines. Yeah, like they're real people. And I, you know, I think one of my close so we've gone to Breakpoint, we've spoken to lots of validators. I've been really really close, like close personal friends with some of these validators, right? So I want to give a shout out to two, right? One of them is Compass, right? Johnny from Solana Compass, and another one is Michael from Lane or StakeWiz, right? So both of these I've met in person multiple times, personal friends, and apart from them running good validators, I can see that they are also huge net contributors to the Solana economy and the stake like informing people what staking is. So if you go to solanacompass.com, right? Solanacompass.com, or you go to stakewiz.com, so that's stake and then wiz.com. They have like huge, like lots of information about what staking is, what LSDs are, and like I am very, very happy to support like both of these guys, because these are like really, really good validators who are really caring about the space. Yeah. So those will be my two picks. Yeah.
Good, very good answer. I think definitely. I'm always a fan of shouting out the smaller guys, the unsung heroes. Yeah, we'll definitely have to check some of those out, as well as Pathfinders, go deeper into Sanctum, all the other stuff you mentioned. A lot of cool stuff to look into. I really appreciate you coming on and walking through everything with us, making everything super easy to understand, kind of like expressing the urgency and the importance of kind of what's going on over there. Yeah, I think that about takes us to time here. Cedo, you have any other questions here?
I think we don't usually ask this every episode, and you mentioned a few names, but I think this domino effect of good episodes has come from this. We talked, we heard about you guys through Anders from Marginfy. Is there any other projects or anybody out there that you haven't already mentioned that we should look into?
Ooh. um, Good
We've had
question.
Drift on.
Yeah. Yeah.
Who else have we had on from Solana, Ali?
Parcel,
Parcel, yeah.
margin drift.
Mm-hmm.
I feel like there's more than that.
You know what? Let me take a rain check on that.
Yeah.
Like I like these are all projects I think are really good, but I'm trying to give you guys like a deep cut, like something that you
Mhm.
may not have heard of, right? So let me get back to you on that. Yeah.
Awesome.
That's what we're
Well,
looking for sure.
that's it for this week. Appreciate everybody for joining. Thanks again for coming on, Lee.
All right. Cheers. Pleasure.